Alright, what's up guys? So in this module we are going to cover two small things, but they are very important and will give you another edge in the market. So now we are going to be talking about what is open interest, what is Bitcoin dominance, and what is long short ratio, and how you're supposed to basically use those concepts to your own edge. So now starting off with Bitcoin dominance, what is Bitcoin dominance? So over here in TradingView, you can click, you can type BTC.D and the chart will come up. So in a nutshell, what is Bitcoin dominance? So Bitcoin dominance is basically the comparison of a whole cryptocurrency market cap from the comparison of Bitcoin compared to the other cryptocurrencies. So for example, currently Bitcoin holds 40% of the market cap of the whole cryptocurrency, if I'm not wrong, while the other 60% is held by all the altcoins or whatever coins you can say. But if I want to make this very simple, I would just say that Bitcoin dominance is a chart that shows us how much money is flowing out of Bitcoin into the other coins, and how, or if the Bitcoin dominance increases, it is showing us how much money is coming from the altcoins into the Bitcoin. So for example, if we go to the weekly time frame of Bitcoin dominance, what we can see is since December 2020, a lot of money has flown out of Bitcoin and went into the altcoins, that is the other coins. And what I can see over here is from May to 2018 to August 2019. In this particular phase, I would say a lot of money has been came into Bitcoin from the other altcoins. This is a very simple way to summarize what Bitcoin dominance is. Now, how are we supposed to benefit from Bitcoin dominance? So the thing is very simple. Now, as a trader, to make money we need big moves. For big moves we need liquidity. So obviously we need to stay at a particular side where there is more money. Obviously where there is more liquidity, there will be more moves and there will be more profit. So that's how we are going to use Bitcoin dominance. Now Bitcoin dominance, if you look at Bitcoin dominance, currently Bitcoin dominance is at a support region, which means Bitcoin dominance can now go higher from here. So what does this mean? If Bitcoin dominance is going higher, it means money from the altcoins can possibly come into Bitcoin, which means Bitcoin will have a higher liquidity. So now what we will do, if the Bitcoin dominance shows us that yes, I'm going to go higher if I'm at a support, then what we should do is we should focus more on Bitcoin, because that will have more liquidity and we will be able to make more money from Bitcoin, obviously because the Bitcoin dominance is going up. Now vice versa, what we can do is, for example, let's just say Bitcoin dominance is falling violently. So for example, over here we had a very good bull flag pattern. If we can let me just draw it. So here we've got a very good bear flag pattern on Bitcoin dominance. So now over here, if Bitcoin dominance broke down, what is this telling me? This is telling me that a lot of money is flowing out of Bitcoin into the other altcoins. So what I can do now is I can focus more into the altcoins, because now money is flowing into that. Obviously now that will have more liquidity, that will have more bigger moves. So what I can do now, Bitcoin dominance is telling me that okay, money is flowing out of Bitcoin into the other cryptocurrencies. What I can do is now I can focus more on trading the other altcoins and other cryptocurrencies rather than Bitcoin, because they have more liquidity. So this is how you are supposed to basically look at Bitcoin dominance. So Bitcoin dominance, in short, what it tells you how much money is basically flowing in or out of Bitcoin to the other altcoins. So that's how I personally use Bitcoin dominance, and how you can use Bitcoin dominance. This is a very fun tool to use. It's not that this should not be the bottom line of your trades. Obviously this is not something that you should be completely making your decisions based on. This is something that you can just add to your arsenal of trading and just use this for some confirmation purposes. So obviously don't just use Bitcoin dominance for taking your trades. Obviously always make sure that you also have minimum 5 other confirmations, and Bitcoin dominance can just be another tool that you can use to confirm your bias in the market. So now this was all about Bitcoin dominance. Let's talk about what is open interest and basically how you are supposed to use open interest and long short ratio. So I'm sorry. So over here, when I come to futures trading, over here I can see that I'll see some sort of information on the top right. From here I can click on trading data, and that will take me to another window where I will be able to see these pictures. All right, so now starting off with open interest over here, when I go to the trading data, I'll see some things like this, like open interest, top trader long short ratios, long short positions, long short ratio, and all that stuff. So basically, how am I supposed to use this to my benefit? So now starting off with open interest, what is open interest? Open interest is nothing but how many open contracts, how many open positions of Bitcoin Bitcoin futures is there. So obviously you can just select is any other position. Like for example, I want to see theta, I can open theta and it will show me the open interest of that. But obviously I use this only for Bitcoin, and you can obviously use this for other coins as well, but I use this only for Bitcoin to get a good macro view of what's happening in the market. So open interest is nothing but how many positions are open currently in the market. Now open interest does not tell you whether the positions are on the upside or on the downside. It just only tells you how many positions are open. So what we can do is we can combine open interest with long short ratios and understand whether what's happening into the market, whether the people are going short or whether the people are going long. So what we are going to do is we are going to combine this data, obviously. So now remember one thing, always use this on the 1 day time frame. Do not use this on the lower time frame because the accuracy is not going to be that well. So obviously if you can see, if you see, I switched the 5 minute chart and it's showing me a very imbalanced chart. So I'm back on the daily time frame and let's try to analyze what's happening over here. So on 1st of January, the open interest was 74,800, while on the 2nd of January, the open interest decreased to 72,971, which basically tells us that some positions have been closed. So now whether the longs were closed or whether the shorts were closed, how will we identify that? We will identify that by looking at the long short ratio. So over here on 1st of January, 21% of the people were short and 78% of the people were long, while on 2nd of January 26% people went short while 73% people went long. So what happened basically over here, the longs decreased and the open interest decreased as well, which is basically showing us that positions were closed. And since longs decreased over here on this particular day, this basically tells us that the long positions were closed on this particular day, which eventually tells us that the market is planning to go lower, or basically the market participants are expecting the market to drop. So this is how basically you are going to read open interest. So for example, over here on this day that is 31st December, the open interest was 71,800, and then on the next day the open interest increased to 74,800. So open interest increased, which means positions have been created. So now on this particular day, that is 31st December, 74% was long and 25% was short, while over here 78% were long and 21% went short, which basically tells us long positions were created in this particular scenario. Because since the open interest increased as well as the long positions increased, it basically tells us longs were built in Bitcoin, obviously, which tells us that the market participants are expecting the markets to go higher. Let's do it this one more time. So over here on 12th of December, 21st of December, the open interest was 61,800, while on 22nd of December, the open interest went 70,000, which increased very, very much. So on let's just see what happened. So on 21st, the long account was 78% and 28% was short, while over here 42% went short and 57 went long, which basically tells us a lot of positions were created on the short side because shorts increased as well as the positions increased. So this is how you're supposed to basically read open interest, and this will basically give you a fair view of what the market participants are expecting. So for example, like I said, over here in the current scenario, the market participants are expecting the markets to go long or to go short, to go lower, because obviously they are closing their long positions, which means they are bearish. So this is how you're supposed to use the long short ratio, the open interest. Now the long short ratio also can be used in a second way, which is basically if the long short ratio, what you can do is if you can use this basically without even open interest. What you have to do is basically think the opposite. So for example, if currently the long short ratio is 2.8, the 2.8 is actually very, very high. Anything above 2 is something that you should be worried about, because it shows that a lot of people are in the one side of the market. So for example, in the current scenario, 73% are long while 26% are short. So usually what happens is the big players, the majority is always the retailers and the beginners, and the big players will always slaughter them. So what you have to do is that the long short ratio is more than 2, you have to see which side we are at. So obviously now the long short ratios, so the long account comes first, obviously, because it is long short ratio and not short long ratio. So which means that the longs are a lot much more than the short side, which obviously shows us that market participants are blindly bullish, and these are the times when the markets gives violent dips, obviously. For example, if you see over here in this particular case on 21st of December, what happened, the market was at a long short ratio of 2.49, and then on 22nd of December the market dipped probably, and the long short ratio went back to 1.3. Let's just check what happened on Bitcoin on 22nd of December. So over here, let me just see 22nd of December. So over here, you can see we had some sort of an up move and then a good downside move on, so 22nd of December, which basically shows us that, yeah, definitely there was some sort of activity that was going on in the market. So over here, you can see the market went higher and then from here we had a dip. This was not much great of a movement, but definitely it will help you understand where the markets are planning to go. So obviously, even the open interest, even the long short ratio, even the all these things, all these data, these are just data points, and obviously you should not be making complete decisions based solely on this particular data. This is basically going to tell us what the market participants are expecting and what you should take from that. And obviously this can just be used to confirm your bias, and it's this is not the end of everything. Just remember that. Don't blindly use these data points to your in and apply them into your trading. Obviously, I hope all of that is clear. Now I'll see you in the very last module where I will open all the secrets about the crypto market and how you are basically supposed to form a bias. So I'll see you in the last module. Thank you so much.